guys, it's Ruhi, and it's been 1 week since we've seen SVB and Signature Bank collapse, and we have seen other major banks, the top three, about 30 billion into First Republic Bank. I really believe that the Fed has broken something, and as a result, we can anticipate that their rate hiking agenda is going to stop soon. In fact, we've seen rates go down the beginning of this week, and they're now being baked into the market looking over the next year. So those rate cuts will provide, hopefully, immediate relief to the bank balance sheets, and it's going to be well received by the broader market. But I personally feel that there is a little bit of a smokescreen, and I believe that the funding by these other major banks to First Republic Bank is really not going to be enough. I believe that the Fed needs to step in. And I was speaking to my insurance partner this morning, someone I've done insurance for my vehicles and my property with for the last 15 years. And she has been in the business for 45 years, and I'm hoping to have her on one of my episodes next week. But until then, here's what she said to me. She said, Ruhi, I've been in the business for 45 years in insurance, and I've never seen it like this. She said, with the rains that we've experienced in California, in the Bay Area, as well as the fires in the years before, the insurance companies are moving out of California. Now, she's with Farmers. Farmers has their head office here, so they are here to stay. But they are afraid that if there is any other big catastrophe, fire, or anything like that, that they're not going to be able to pay out. With that, with what's happening with the Fed and the interest rates, and they're curbing inflation, or they're collapsing banks, whatever they're doing, or hopefully they get their plan together, there are a lot of big investors out there who are telling you to brace yourself. And I do agree. I do believe that if you have a lot of assets in the bank over 250, which is the FDIC limit for insuring your deposits, then you need to diversify. Please listen to me carefully, because I'm going to read something to you, which is very interesting. It was an article I read, and it quoted billionaire investor Bill Ackman, where he's criticized the plan by 11 U.S. banks to deposit $30 billion into First Republic, or FRB, saying it creates a false sense of confidence. And I happen to 100% agree with that. I believe that we are just one disaster or one significant event away from big collapse. And if you own a tangible asset like real estate or gold or any precious metals or anything like that, then I think you're in good shape. But I think that if you've got funds in our financial institutions, then you've got to be very smart in what's there and how much is there. And that's not, I am not an alarmist by any means. I'm just kind of looking at all the information that I'm getting from people I speak with. I'm using a little bit of the media stuff. I don't take the media too seriously, unfortunately, anymore. But I do believe that it's kind of like the perfect storm. So I'm going to link an article below as well that I write, and is going to give you some more substantial information as far as what mechanisms the Fed's using, how it's going to impact the markets over the next coming days and weeks. We believe for highly diversified portfolios across asset classes and a straightforward way of thinking, that we're going to be okay. But real estate investments continue to gain value, especially when there is such limited inventory on the market. And I do believe that we are going to continue to see limited inventory because the general public is highly confused. They don't understand what bank runs are. They don't understand what happened with SVB. They don't understand that these other large three banks are getting all sorts of new clients from the smaller banks and financial institutions. I got a message from Star One, a very lengthy email, and I've been with Star One, which is a credit union, for many, many years, over a decade. And they sent me an email saying, "We are strong. Here are our numbers. This is what we're doing." So that tells me I haven't seen a letter that with like that from them ever. And so obviously I am smart enough to be able to read between the lines. And I understand that a lot of customers and depositors of these credit unions and smaller financial institutions are moving to the big three. I'm hoping that the big three are going to continue to be strong. And when I say big three, I'm referring to Wells Fargo, Bank of America, and JP Morgan Chase. Wells Fargo, I don't know. I think they've been kind of bailed out and kind of skating on thin ice personally. But again, I believe that they are still strong. But that's as long as they are not being requested to fund other institutions, because that's going to make them over leveraged. I just recorded a video yesterday, and I am adding this new video to that video because things are changing so quickly that I'm a little bit caught off guard. As you know, I'm a real estate broker who is very knee deep in with learning about the banks and what's happening in the system, and I'm trying to share it with all my clients along with all my viewers. And honestly, all of the different information I've been getting from different media outlets, my colleagues on YouTube, and then just reading what I'm seeing from Janet Yellen, as well as the Fed and what's happening in the stock market, it's actually quite overwhelming. So the latest news is this. First Republic Bank, though it has been bailed out by a lot of these large banks, and that's what I say in my previous video. So they were offered $1 billion by UBS to buy Credit Suisse. Well, Credit Suisse said, absolutely not. We own more in real estate for our buildings than the $1 billion, so no deal. Then UBS came back to them on Sunday and offered them $3.1 billion, and Credit Suisse accepted that offer because they were declining very, very quickly. Since then, on Monday, if you watch the stock market, you watch what happened with First Republic Bank, you saw that the stocks are plummeting, and they've gone to their depositors and asked their depositors to hold off pulling funds out, that they would give them these extra bonuses or perks, and that was not a good decision by First Republic, because that made the depositors even more jittery. And as we speak, they have been downgraded, and they are in a situation where things are very, very shaky. And by the end of the week, today's Tuesday, March 21st, I would speculate that by the end of the week, we will have seen a collapse of First Republic. I hope I'm wrong. I hope what I'm reading and what I'm analyzing and seeing is incorrect. This is my opinion. But what I see is the writing on the wall, which is they are in some trouble. Now, going back to Credit Suisse, just so you understand what that means is that the billions of dollars of investments and loans into Credit Suisse, those are all wiped out. Anything that's FDIC insured up to that 250 is protected. Anything beyond that is wiped out. Same thing if First Republic Bank goes out, the same thing happens to all their investments, investors, all that gets wiped out. So why am I'm drawing attention to that? Because you have to understand that as these small banks are starting to fail, we are hearing from Janet Yellen saying, well, we are going to bail out the banks that will cause a catastrophic repercussion in our banking system. So if there's a systemic risk for the nation, then they will bail out that bank. But if there's not, then they will essentially let them go under. So what I'm hearing is that they are trying to keep a contagion. If it's going to cause contagion, which if you know what contagion means, it means that if it's going to cause something that is contagious, that's going to spread like a virus and affect or cause panic amongst the population, then they will contain it. Otherwise, you're SOL. So that makes me wonder if they are, and when I say they, I mean the Fed, is maybe considering letting the little guys, all the little banks, fail. And of course, they're going to protect their depositors to the FDIC limit, which again is the 250. So if you have sold a house, sold a company, sold something, and you have got more than 250,000 in each account at each specific institution, then anything above the 250. So if you have 500,000, you're going to lose the 250. If you have $1 million, you're going to lose the 750. Those are the repercussions of the Fed not bailing out all the small guys. Now, what does that mean? In my opinion, again, I am not the expert, but I'm certainly someone who is watching the market closely and following a lot of the analysts and economists. And I've been doing a lot of reading and gathering this information to share, which is that I believe the Fed is trying to maybe only keep the large 3 or 4 financial institutions in play. Now, if you go back in history and you look at 2008 and you see what happened in 2008, we saw something very, very similar. And I'm going to actually share what exactly that was, because history does repeat. And, in the 2008 financial crisis, the Dodd-Frank regulation forced closure or merger of most of the community banks. And now it appears that the Fed Reserve is going to do the same to the regional banks, leaving only the few large banks left. Now, leaving the few large banks left might be something that might be part of their strategy to their next step. Who knows what that is? But I've been watching, and I am starting to feel that that is their plan. Tomorrow, we are going to find out if the Fed is going to raise rates. And, they were raising rates rapidly, which is what caused some of these banks to fail. And now all eyes are on the Fed. So 3 things could happen. 1, they can raise the rates, and they can raise them, the 0.5 as they were planning. And that will, in my opinion, again, cause more banks to fail by the end of the week. I can almost guarantee it. If they raise the rates only 0.25, then they may be in a situation where they save face and do, something towards curbing inflation. And still, we are going to see some banks fail, but not probably as many. And if they do nothing, then the alarm bells are going to go off, because they are going to do nothing to curb the inflation. Now, I feel that they're damned if they do, they're damned if they don't. So I'm really curious to see what happens. I have seen all of a sudden the real estate market take off again, because people are pulling funds out. They're either going into the big 3, or they are going and putting their money in real estate, which, in my opinion, is always the strongest asset. I'm obviously biased because I am in real estate, but I've said that since, for the last 30 years, since I was 17 years old and started in real estate. I've said that real estate is probably the best asset just because it's tangible. and just like gold or other precious metals. So these are, again, just my thoughts. I'm trying to share and trying to kind of digest all the information. We're getting a lot of information, and I'm trying to share that with you. I hope this helps. And tomorrow I will be putting out another video with an update on the Fed and just kind of seeing if what I'm saying is actually coming to fruition, or maybe I'm wrong. Who knows? Again, this is my thought and this is my analysis of what is happening. But, if you think it's something different, feel free to put it in the comments. I would love to hear what your thoughts are. And, maybe you can educate me if you think I'm wrong. Thank you. I hope this helps, and bye for now.